Today there is an important set of banking rule changes from the DWP that every pensioner in the UK should become aware of. These are not hypothetical suggestions, but emerging policies that could affect how and when your pension reaches your account. These 6 new rules deal with verification, overseas accounts, joint accounts, transaction scrutiny, automatic renewals, and the winding down of cheques. The changes are being introduced with the stated aim of protecting pensioners from fraud, but when they touch your income, understanding them fully becomes essential. In this narrative, I will walk you through each rule in realistic detail, explain what it might mean for you, share scenarios, and suggest steps you should take right now to safeguard your pension payments. The first rule change involves strict bank account verification. Under the new system being developed, your bank account must exactly match the name and personal details that the DWP holds on file. If your account is in a slightly different name, perhaps missing a middle name, using initials, or using a maiden name that differs from DWP records, it may no longer be accepted automatically. If a pension is due to go into an account that fails this verification, payments could be paused until you provide documentation such as proof of identity, a utility bill, or a bank statement matching your DWP record. The risk of suspension may begin once the new regime is fully rolled out, which some policy outlines suggest could be as early as later in 2025. The second rule involves annual renewal or reconfirmation of bank details. Instead of setting your banking details once and assuming they remain valid indefinitely, you may be asked each year to revalidate your bank account. This means confirming that the account is still active, the name is correct, your address has not changed, and that nothing in your personal profile has diverged from DWP records. If you fail or delay this revalidation, payments could be placed in a pending status until you respond. For pensioners who travel, relocate, or change address, this will demand more vigilance. Third, the new rules impose tighter checks on overseas or non-UK accounts. Many pensioners move abroad or maintain accounts overseas, receiving their state pension outside the UK. Under the updated framework, these accounts may be subject to additional scrutiny. You may be required to submit proof of residence, for example, utility bills, tenancy contracts, or local tax documents, provide certified translations, or show more identification to prove your identity and address. Some pensioners may find that their overseas account is flagged more frequently, triggering delays or requests for supplementary documents. Fourth, there is likely to be a tightening of policies around joint or third-party accounts. If your pension is paid into a joint account, whether with a spouse, child, or other person, each person on the account may need to satisfy verification. Some early drafts of the changes indicate that if one of the joint holders does not meet DWP criteria, the payment may be suspended until both can verify their status. If your pension currently goes into a third party's account, say a trusted family member's account, you may be required to move it to an account solely in your name or prove that the third party is acceptable under the new verification regime. Fifth, under the new rules, banks may be compelled to monitor unusual transaction patterns in pension receiving accounts and flag anomalies to the DWP. For example, if your account balance or transaction amounts deviate significantly from what the DWP expects for a pensioner, for instance large deposits from unrelated sources or frequent withdrawals outside typical spending patterns, the bank might trigger an alert. That does not necessarily mean DWP will demand full disclosure of all transactions, but flagged accounts could be placed under review, paused, or asked for explanations or supporting documents. Sixth, the DWP is pushing to phase out cheque and paper-based pension payments. Under the new regime, paying pensions by cheque or any paper-based method may be discouraged or gradually eliminated. Pensioners who currently rely on checks will likely have to transition to electronic payments into verified accounts. Those refusing or failing to make the switch could face disruption or delays in receiving their pension. Together, these changes may feel subtle at first, but for many pensioners, the consequences of inaction could be serious. Consider Mrs. Davies, age 78, whose bank account name is Margaret A. Davies, while DWP records read Margaret Ann Davies. Under the new verification rule, the mismatch might freeze her pension until she provides proof of identity or updates records. Or Mr. Singh, 91, whose pension is credited to a joint account he shares with his daughter. If his daughter's name does not satisfy new verification criteria, his pension may be withheld until she also verifies. Or Mr. Thompson, who lives in Spain and uses a Spanish bank account. The stricter overseas account checks may require him to send translated utility bills and certified IDs he never expected to provide before. For many, the introduction of annual renewals could catch people off guard. Imagine a pensioner misses the revalidation window by a month, only to find their payment in pending status until they submit documents. What if you are late, refuse, or fail to comply? The most probable scenario is pausing or delaying payments. DWP or the bank may mark your pension as suspended pending verification rather than cancelling it outright, but for someone relying on this income, even a delay of a few weeks could pose serious hardship from missed rent payments, utility bills, to basic household needs. In worse cases, pensioners may struggle to reach DWP or their bank in time to resolve issues, especially if they lack digital access or live in remote areas. To protect yourself, there are steps you should take immediately. First, verify your DWP records. Log into your personal pension account. Check the name, address, and contact information they hold, and compare that with your bank account. If you see any discrepancy, even a single initial or spelling difference, take steps to correct it now. Second, ensure your bank account is active and regularly used. A dormant account may be flagged or require reactivation. Third, if you live abroad or use an overseas account, begin gathering proof of address utility bills, local tax statements, lease agreements, or official correspondence, and certified translations if required. Fourth, if your account is joint with someone else, talk to them about the upcoming changes and make sure they are ready to verify or accept responsibility under the new rules. Fifth, if you are still receiving checks, contact DWP now to request a shift to an electronic transfer to a verified account. Delaying this could push your pension into limbo when the change becomes mandatory. Sixth, stay alert for incoming communications letters, emails, or messages from your bank or DWP requesting revalidation or documentation. When you receive such requests, respond immediately and accurately. You may worry that these new rules grant the DWP and banks too much influence over your privacy or everyday banking. That concern is legitimate. Some pensioners may feel scrutinized for routine transactions they conduct buying groceries, medical expenses, or small transfers to family. People who lived simply and modestly might worry that any deviation from normal could be taken as suspicious. That's why it is critical to be transparent. Keep records of your transactions if feasible, and respond quickly when asked. The DWP and government will need to balance protecting pensions with avoiding punishing honest pensioners. For those aged 50 and above who depend on pension income, this is not a small administrative change. It is a potential disruption to your financial security. Some older adults may struggle capturing documents or navigating online portals. Others may not routinely monitor mail or communications. If your address has changed recently, or you use multiple bank accounts, or you live between two countries, the risk is greater. Over the months ahead, Watch how pilot schemes and regional rollouts proceed. Some banks may initially treat these rules, softly flagging mismatches with warnings before suspending payments. Others may be stricter. Pay attention to letters from DWP. Check your MyGov pension account and talk with local citizen advice bureaus or pensioner advocacy groups if anything seems unclear. If you find an error or believe your payment has been wrongly withheld, appeal quickly, lodge a formal complaint, and document your communications. In the broader picture, these banking rules represent a shift in governance over how pensions get paid, not just how much you get, but how securely and reliably those payments reach you. It is part of a trend towards stronger verification and accountability in benefits systems across the UK. While many pensioners will comply easily, the ones most vulnerable, those with older records, name changes, overseas residents, digital inexperience, are at greater risk. By understanding these rules now, comparing your records, and taking proactive steps, you greatly reduce the chance of disruption. If you find this breakdown helpful, please like this video and subscribe to the channel so more people receive accurate practical updates about pension and DWP changes. The coming months will test how well these rules are implemented, but you don't have to face uncertainty blind. Stay alert, confirm your details, prepare your documents, and assert your rights. Your income depends on it, and knowing is half the battle.